joined by Ajay Bagga, market expert. He's joining us live from Mumbai. Welcome to World Business Watch, Mr. Bagga.
Thank you.
First up, what is your take on market moves after the latest jobs and inflation data from the US?
Yeah, the expectation was for about 150,000 jobs being created in December, and the number came much higher at about 260,000 odd. So that set the tone for the markets that the US economy is very strong. Second, because of that, the Fed will not need to cut rates. And now the markets are discounting just one rate cut, if at all, in this entire year. And that also is a 40% probability. Mostly, there will be no rate cuts needed by the Fed in 2025. Why is that bad news for stock markets? Because that then becomes a drag on US consumers, on borrowers. They have to pay higher rates for their borrowing. The government has to pay higher rates for their borrowing, and the bond yields have gone up as well. Now, the US bond yields are the basic number which is used to price a lot of risk assets around the world. And that's why we are seeing global stocks selling off and global bonds also losing price as their yields are going up. So overall, a risk of attitude in the markets based on this report.
Right. Mr. Bagga, I also want to see your assessment on the risk assets which have had a rocky start to 2025. That's even before Trump's policies kick in. What is your outlook for markets under Trump 2.0?
Yeah, see, Trump is very pro-markets, and he really likes to talk up the U.S. markets. But right now, what we have seen is the last 2 years, the U.S. markets have delivered 20% plus gains. This last happened in 97, 98, and 99 was another year where we saw a 20% gain. So very rarely do you see 3 years in a row the markets outperforming in the U.S. like they are slated to. So what we can expect is some weakness in the US markets, higher yields, because Trump's agenda is basically four-pronged: anti-immigration, so deportation of immigrants, illegal immigrants. Second, it's very inflationary because there will be more fiscal deficits, more tax cuts, and less regulations. All that will lead to higher inflation, and the Fed not cutting higher rates around the world, which is not a very conducive environment for stocks. So we expect a weak stock market for 2025, at least in the first half, till Trump's policies get digested.
Right. And just to take that point further, what is your outlook for the Indian stocks once Trump takes office?
Yeah, we are in a very strong grip of pessimism, and I'm expecting a big sell-off again on Monday, unfortunately, based on what's happened in the US on Friday. Overall, I think the Indian markets have some more way to go, maybe 2 to 3% more fall. We are pretty near bottoming out in terms of pessimism, but our risks are, apart from the global risk, and the Trump policies will cause FI outflows from all emerging markets, including India. Our risks are more internal as well, with slowing corporate earnings growth, a slowing economy, and lack of fiscal impulses, and a monetary policy which is very tight. So the money markets are seeing a negative liquidity of 2 lakh crore rupees on a daily basis. RBI is trying to step in and inject liquidity. But overall, financial conditions have tightened a lot in India, and along with slowing earnings, that's not conducive for stock markets to do well.
Right. Thank you so much, Mr. Bagga, for joining us on World Business Watch with your insights.